Okay, everybody, let's take a moment and look at the disclaimer. This content is educational, informational, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to spread the word about how BTA analyzes the markets. This is Rod from BTA, and we are known, everybody know us, as the middle traders. And we are not going to get out at the exact top, but we will. How many times do I have to say it? But we will make a lot of money in the middle. We are the stock market's masters. And sometimes it seems as though we can see the future. What we want to look at in this video is some basic breadth indicators. And we're going to do a part 2 to the other market breadth indicators that we look at. But right now, I just want to go over some of the basic ones that we look at. And one of our most key market indicators, market breadth indicators. Now, you see here, this chart is a daily chart of the total U.S. market. We're looking at the percentage of stocks that's above their 200-day moving average. Now, we were down here, okay, below 15, okay, earlier this month, earlier in May. That's bear market territory stuff. That was a problem. As my mentor say, a problem, Sherrod. We got problems. He didn't say problems. He said problems. When he started saying we got problems, I know we got some serious problems, okay? But we were down here in bear market stuff. But now we're starting to show some improvement. We're above. We got 21% of the total U.S. market. 21% of the total U.S. market is now above its 200-day moving average. Now, granted, that's not great because you see this red line here, this red horizontal line, that's our red line. That's the 40% level. Here, the yellow line is our 50%. This green line up here is our 60% level. So anytime we fall below 40%, the red line, well, that's the red line. That's stop. That's a problem. Okay? When we start falling below 50% of the total U.S. market above it's a 200-day moving average, it's time to get a little cautious. So, and when we above the green, when we get above the green, the 60 level, it's let's go. It's go time. It's money time, baby. But right now, we down there, 21% of the total U.S. market is above its 200-day moving average. It's well below the 40 level, which is our green level. So this is correction territory. This is a pullback territory. This is definitely an area where you don't want to get too courageous. So even though we are long the market for sure, you know that already. We know that this could be just a relief rally. This could just be a tradable rally. Well, the breadth will start to improve. See an internal downward trending trend line right here, which has ended up right around 30 level, and then start moving our way back up, breaking above some of this overhead resistance, and get back above 40, well, that would be great. So that's the total U.S. market. Let's look now at the Standard & Poor's 500 percentage of stocks. This is a daily chart of the Standard & Poor's 500, the percentage of stocks above its 200-day moving average. And once again, we were down here in some real trouble territory. We got below 18% market. Only 20% of the Standard & Poor's 500 rather was above its 200-day moving average. That's problems. We know that. Okay. So, but right now, the Standard & Poor's, which is the larger companies in the market, hey, it's starting to show a lot of improvement. We at 36%. The 40 level is our red line, right? You see that red line? That's our 40 level. That's the stop. That's the problem. That's, hey, we got a pullback, correction, something going on. Well, we at 36. Let's see if we can get above that. If we can start getting back above this level, that 40 level, that's a major improvement from where we come from. Now we got this downward trend line here, this internal downward trend line. We could get above that and get above the 50 level, which is our caution, this yellow line here. Well, that's telling you that the market may be trying to turn and maybe it's going to get back to those highs, okay? The high of the high of whatever the high of the day of the inverted yield curve conversion on that day, that high, I've been telling y'all, I don't care what anybody says. History has shown us it has happened every time. When we get that yield curve inversion, the market sells off and then it rallies sometime in the future, sometime after the sell off, and it gets back above the high of that day of the yield curve inversion. Whatever that high was, it gets back. The recession sell off happens. So, look, I keep telling everybody this sell off we looking at right now is not the big one. The big one is coming. Okay. We're going to run this, they're going to run this market back up to at least the high of that high of the day of the yield curve inversion. And they might run it all the way back up to all-time highs to suck everybody in. And then you're going to see job losses. When them job losses start showing up, then you're going to see that recession numbers coming in. Then everybody going to start talking about we in recession and then boop, pop. Bubble pops, market drops. Then you're going to get the big one. Then you're going to get the big one. This is not the big one. So let's see if we can get back above 40 on this market breadth, the percentage of stocks above the 200-day moving average on the Standard & Poor's 500. It may run back up, get back above the 50 level. That's going to be great. We start seeing that, you're going to hear me start yelling. We're going back to that high of the inverted yield curve day. You're going to start hearing me yelling that. Okay? And I'm going to buy this thing all the way back up to that. And then I'm going to wait for the bubble to pop. And I'm going to make my bet that it's going to drop. All right? I don't know what else to tell you. Now, here's the percentage of stocks above their 200-day moving average. This is a daily chart of the NASDAQ. It's getting better. It is getting better. We were down here in straight up bear market territory. Okay, we were down here below 15, started getting down near 10% of this NASDAQ above its 200-day moving average. We were starting to get way down there. Now we're back at 18%. We got above this lower internal trend line, and now we come into this upper trend line here. Okay, so let's see what happens if this continues to improve, which is our caution. So we ain't out of the woods yet. But it is showing some improvement, and the 200 percentage of stocks above is 200-day moving average. So now, this is also interesting. It's no reason for anybody to catch FOMO, fear of missing out. Yes, we got in on the follow through day. Well, the day after the follow through day, and we went long the market and long some stocks. That's true. But don't worry. If you didn't get in on Friday, the day after the follow through day, if you didn't get in on Thursday, the day of the follow through day, look, if this market is to work, it's going to be a whole lot of stocks that's going to be setting up. Because think about it. The 200-day moving average is our line in the sand, really, right? Paul Tudor Jones taught us that. He said, if the stocks are above his 200-day moving average, I'm going long. If it's below his 200-day moving average, I'm going short or I'm sitting on the sidelines. Well, in the NASDAQ, only 18% of the stocks are above its 200-day moving average. So if this thing is to run, you got a whole lot of stocks that's in the NASDAQ that has to set up. You don't have to worry about missing out. Don't rush into this thing. Let it set up. And also, don't forget, our Bollinger Band RSI MACD stochastic strategy is now just setting up now for the pivot week. We got the setup week. It passed the checkpoints, the checklist on the setup week. It passed the checklist, okay, for the signal week. and now we are at the pivot week. Next week is the pivot. Now, that strategy has only happened 4 or 5 times in the last 25 years. And only one out of those 4 times, and it wasn't even that one was not really a shakeout because the stochastic never went correctly. You would have saw that and you wouldn't have took that trade. So technically, it has never failed. It is rare. It only happened 4 times in 25 years, and it has never failed. Well, it's setting up next week, the signal week. Okay, so it's no reason to worry if you missed a follow through day because that strategy is setting up next week, and we discuss it every Monday and Thursday. We've been talking about it for the last 3 weeks that it's setting up and the market is bottoming. So you know we going in on the Bollinger Band stochastic RSI MACD strategy next week if the pivot week is successful. So don't have a fear of missing out. We talk about it. We've been talking about it. Now, that strategy, the details of that strategy, I'm not going to go through here because that's for our group, us that's part of our group on browntrainingacademy.com. It wouldn't be fair for me to do that. So I won't be discussing that here, but I'm just telling you, don't have a fear of missing out. Even if you don't know that strategy, the key details of that strategy, it's still going to be a lot of stocks setting up, breaking out on just the things that we already discussed. Go back and look at the videos we just put up on the ETFs that we took positions in. The reason we took a trade in Microsoft and not Apple. Those setups work perfectly. We use them all the time. You got plenty of stocks that's going to have to do those setups before this thing is over, if this rally is to have any teeth and to go anywhere. So don't be afraid that you're missing out. Don't go jumping in stocks that's not setting up properly and not showing you the momentum and the volume, the acceleration. Okay, don't do it. Wait until you see it and then go. Now, this is our go-to, okay, our numero uno, number one market breadth indicator. If there is any indicator, it doesn't fail. It's almost 90%. This is a daily chart of the Dow Jones Advanced Decline Issues Differential Invisible Chart. Okay, you're not going to hear anybody on the internet talking about this. I haven't heard anybody, and I listen to a lot of these so-called traders. Basically, what you need to know is when this green line cross above the yellow, and then the green line get above the zero line, which is this red horizontal line, and then it gets above the red moving average line. And then the green, the yellow, and the red starts to turn up. We're going to generate this green arrow. And that's our signal that the market may get ready to rally and we start looking to buy some stocks. It's a lot of participation coming into the market. When this happens, it's a go time. And this happened right around the follow through day, so we knew that it was time to go. And it was getting better. It was improving when the market was so called. Everybody was saying we bottoming and bottoming and bottoming. It's bottom is falling out. No, we say it's not bottoming. Not the bottom is not falling out. The market is bottoming. Do you understand? It's about to rally. Okay, but they didn't believe us. Okay, but now they know. So we got our green arrow. We got our green arrow. That's our green arrow to go. The green line got above the yellow. The green line got above the center, the zero line, and then it broke above the red line. The yellow line got above the zero line, and it broke above the red line. Everybody's starting to point up. So the Dow Jones, the breath under the hood was a go. This indicator has never failed us. This is our go-to breadth indicator. Every time we see this stuff, it works. Look at the Standard and Poor 500. This is the same type of chart. Advance and decline the issues, the differential, invisible chart, all right, of the Standard and Poor 500. And you see we got our green arrow last week. Well, it had been improving all the time. Look how the green line got moving average, which is the red line. The yellow line got above the zero line, okay, and it got above the red moving average, and they all are starting to point up. It generated the green arrow. The Standard and Poor breadth under the hood is definitely started to improve. It was the go signal. We got our follow through day. It was a go. We got the pop. Now let's see if this thing can continue to run. But as long as this here breath, these breath indicators right here, as long as this chart continues, these lines continue to start moving up, pointing up, and start to expand, I'm telling you, the market is probably going to keep running. Now here is the Nasdaq, and we have been saying for days that why is it that the Nasdaq is bottoming and selling off? It's getting lower and lower. Nasdaq is falling apart. Tech stocks is dragging the Nasdaq down, but we kept saying, "Yo, it looks like this thing might be bottoming." Why? It's because as the market was getting lower lows, our breath indicator, our go-to chart, was getting higher lows. And look at it. The green line crossed above the yellow. The green line got above the red. The green line got above the zero line. The yellow line crossed above the red. And look at it. Now it's heading to get above the zero line. And we start seeing this yellow line getting above the zero line and the red line pointing up. I'm telling you, it's going to be the NASDAQ is going to go back probably to those highs of the high of the day of the inverted yield curve. But the whole time when the NASDAQ was selling off, we was getting that double bottom type pattern. We kept telling everybody that it doesn't look as bad as it seemed because under the hood, we saw this chart improving. Okay, it was improving. And we kept writing in our daily note that we put out on browntradingacademy.com every morning. Okay, we kept saying that go-to breath indicator is saying it's showing improvement. So right here, the green line is above the yellow. The green line is above the red. The green line has broke above the zero line. The yellow is heading toward breaking above the zero line. Hopefully it continues. If the market continues to goes up, if this thing breaks above the zero line, trust me, the market is going to continue to go up. We might get some pullbacks and some fluctuation, but it's going to go up. If this keep improving, the market is going up. I'll put my bet on that one. Okay. But I will go to indicator. It gave us the green arrow. So we saw a lot, okay, happening last week. And we got our follow through day, our green light to start buying leading stocks and leading industry group, breaking out the sound based patterns on decent volume. And then our go to breath indicator said green arrow. And Lois, she will lead us to success every single time. Put your trust in Lois is what we believe here at BTA. She signaled an upswing 3 and 4 days before the follow-through day and continued the upswing. As a matter of fact, we do an analysis with Lois looking at what percentage of stocks are in the upswing, and we publish it every morning. And we saw earlier in the week that the percentage of stocks in the bullish upswing was increasing well before the follow through day. We see everything moving. Look out for the next video. Look out for the next video. We're going to be publishing another video about the Bollinger Band MACD RSI stochastic strategy that only happens 4 or 5 times in 25 years and it has never failed. And do you think for 1 second that we are not going to go with those odds? Okay, so till next time, y'all. We look out for the next video. The Bowler Jam Band, weekly Bowler Jam Band, RSI, MACD, stochastic strategy. It's ready. It's going for the pivot week. Hopefully it succeeds. If it does, we're all in. Okay. Look out for the next video.